Jeff, welcome to the show today.
Thank you for having me. Happy to be here.
So you've got a few units, which is kind of cool. And tell us a little about your business. And then I just want to, I want to delve into see how this all got started.
Yeah, no, sounds great. Now, just a couple units now. We've been very blessed. We're up to 33,000 units, and it's been a long-term family business founded by my father, Mark, in 1992. He was a tax accountant in the 80s, saw lots of tax advantages to real estate, put together one syndication, 38 units in North San Diego, where we're from, and then 220 deals later, here we are.
Yeah, that's cool, pretty cool. That's pretty succinct there, Jeff. It's impressive to quickly summarize decades of investing experience. But what it highlights is the investment has been around for long periods of time. I mean, there's many of investments that just simply don't exist, companies that don't exist anymore. And then yet with multifamily real estate, it's been around for a long time. And one of the reasons we do this is not just for financial freedom, which is super cool, but it's actually for generational wealth. It's something that you can actually pass down to the next generation, which is sound like what happened to you guys. I'd love to know. I mean, I'd love to know your story as well, but also maybe a little bit more how your dad got started, and then we can talk about how you got into the business.
Sounds great. Yeah. So, as I mentioned, Mark was in tax accounting, saw lots of benefits with the depreciation, giving you passive losses, making the income tax deferred, as well as the 1031 exchange, which is an extremely powerful wealth building tool that we do every time that we sell our properties. We offer a 1031 exchange for our partners. And he thought that people always would need a place to live, so that housing would be a safe, secure investment to get into. So I was about 6 years old when the business started. It was just run out of our house. The message machine at our home would be, do you want to rent this unit or this unit? And so I got involved in an early age. At that time, the marketing was mostly in the newspaper and driving around. So on weekends, I would join my dad for our acquisitions tours. And if we purchased a property that I toured with him, I get $5 plus 10 cents for every unit. So we bought a 48 unit deal in Oceanside. That was my first paycheck. I was around 8 or 9 years old before getting into leasing and maintenance and working at the properties when I turned 13.
So, so your dad involved you in the business early on, and he basically paid you for sitting in the car.
Yep, yeah, I would help out a little bit. I was kind of a prop. If we needed to see a 2 bedroom or a 3 bedroom, then I'd have to say I had a couple extra siblings, or maybe it was just the two of us needing to see a 1 bedroom. So yeah, I did a little bit, but not much.
All right, so you you got paid for sitting in the car being a prop, and then how did it involve you? Besides that, how did you get more and more involved in the business?
Always loved the business. I do have two siblings. They also worked in the business too, but both of them didn't really show any interest and wanted to go their own separate way. So wanted to kind of create my educational life and my professional life about getting ready to join this business. It was a much smaller business at the time. I was involved my entire life working at the properties, working in the corporate office. I went to USC, got my business degree, went to work at CBRE for 3 years. That was an amazing experience. Went back and got my master's in real estate at USD. And then now I've been back for 11 years full time in the office. And during those 11 years has been one of our biggest growth periods. So we've been acquiring, adding new markets, growing the portfolio, growing the company.
So why did you decide to go get a education and you worked for somewhere else? Like, did you have a conversation with your dad about this? Hey, why don't I don't really need education. I have all the education I need and experience. Why did you guys decide, or you decide to spend some time outside the family business?
At the time, our business was probably 8,000 units. It was still pretty, probably had 200 employees, and we were growing and learning. But we did have the conversation, and he was open to me coming direct or working somewhere else. I personally thought it would be better to work somewhere else and try to go to the biggest, most reputable company that I could, just to learn and make connections and meet people. So that's why I went with CBRE, which is one of the Fortune 500 top real estate companies in the country. Made a ton of connections there, learned a lot, got to bring a lot into our business. And since then, we've grown to, as I mentioned, we've got over 1,000 employees now. We've got 33,000 units, and I've really taken the business to the next level.
What are some of the key takeaways from your time away from you said you learned a lot of things. What are some of the things that you really learned that you were able to bring into the business?
The importance of the financial engineering of debt. So we always do long-term fixed rate financing, 7 to 10 year financing, typically always with Freddie and Fannie. We target LTVs in the 55 to 65% range. So that keeps you in a very secure place. We have never lost any investors' capital. All of our deals have had positive returns, mostly from the debt structuring that we do, because obviously I'm sure you're involved and hear about the market with the variable rate borrowers. There's a lot of issues these days. So we're just very lucky to not have gone down that path. So I learned a lot about the capital markets. And then also, until then, we were 100% syndication. The first deal started with both my grandparents, my dad's two friends. It kept growing word of mouth, friends and family. And then after the CBRE days, brought in a few institutional investors as well. So now 70% of our business is high net worth syndications, 30% of our business is institutional JVs.
That's very interesting. And so, so you kind of left from when your business about 7,000 units, and now you're obviously 33,000 units. Did you and your dad kind of see eye to eye about the future, or did you bring in like new ideas? Was there some conflict between your ideas and his, or how did that go, that transfer with regards to vision?
So Mark is still our CEO and founder, and we work closely together every day, and he'll be working for the rest of his life, as will I. We love this business, and we're very, lucky to be in this business. We, I think, got a little bit lucky that we agree very easily and have the same vision, and just really have one goal, which is making our company as efficient, profitable, and the best it can be. So as long as we both have that same goal, that is what helped us get to where we are today, and that is what will help us in the future as well.
Now, since your dad got started in the early 90s, you went through a few market cycles. Can you talk about some of the worst ones and kind of what that was like and how you navigated that?
Yeah, so sounds good. So the savings and loan crisis, end of the 80s, early 90s, that's when we started the business. Originally, Mark thought we could buy single family homes or duplexes and turn them into 4 or 6 units. And then he saw that the development was very risky. It took a long time and didn't want to do development. So that's when we knew we were only going to do existing acquisitions. And that's all we've done for 35 years. We buy existing stabilized properties where we can go in, improve the operations, improve the physical nature of the property, and upgrade the common areas and the interiors and bring in our management team. But so early on, development was the thought, moved quickly to knowing that it was just going to be acquisitions, and that is what we have specialized in since then.
And so talk to me about kind of a down cycle. Like you start to
Oh,
say,
sorry. Thank you. Thank you. I lost my train of thought there. Yeah. So the savings and loans crisis was the first one that we started in. The dot-com bubble was a smaller one, didn't affect us too much. Right after that came the condo conversion craze, which was actually an amazing time for apartment owners. Many apartments were turning into condos, and the prices that these condo converters were paying were extremely high. So during that time, we were doing really well. We didn't want to do any of the condo conversions. That's just kind of a different business, not really of interest. Then the great financial crisis happened, a lot because of the condos and the single family home development. So with the great financial crisis, that was very impactful for our business. I mean, there was layoffs, there was more evictions, there was rent softening, there was single family homes that were turning to rentals that were new competition for us. So that's when it was super important that we are vertically integrated and we do everything in-house: property management, asset management, construction management. We can control everything that happens at our properties, watch the expenses, know the personnel working there. So we made it through the great financial crisis, no problem. All the deals had positive returns, as I mentioned. A lot of our competitors did not do as well. Then there was a ton of growth coming out of 2010 for us because we weathered a really big storm very well. Then we had the biggest expansion period in history for real estate, probably. So from 2010 to 2022, just an amazing expansion time for multifamily. Home prices were increasing. It was hard for renters to buy homes. And then COVID, scary time. We cannot do evictions. No one knew what was going to happen. But actually, the opposite ended up happening. People's homes were so valuable to them, and now you could work from home, and the rental market went very crazy. And then the most recent one is the interest rate increase, kind of real estate recession. So I'm sure everyone knows interest rates, went from 0 to up 550% in a short period of time, and that's going to cause some market volatility. But for us, that also leads to opportunity. So we've been really big buyers for the last 2 years with how the prices have gone down so much. So been through a lot of cycles, and we will be through there's going to be many more to come too. Just want to make sure that you know your business and know your product type and know what you're doing really well.